Now to our first conversation. Following widespread concerns over the new capital gains tax, federal government have inaugurated the National Tax Policy Implementation Committee to consult widely and address areas of public concern. As I said before, the committee, chaired by Joseph Tegbe, has assured investors that the rollout of the policy will be fair, transparent, and balanced, even as the government on gains from the sale of Nigerian shares. Well, joining us for this conversation now, we have Mr. Muktar Mohammed, CEO of Finance with Muktar. We'll also be breaking up what's playing out with most of the asset classes globally and right here in Nigeria. Great to have you, sir. Good morning.
Good morning, Ladi.
So finally, I know you've been talking a lot about CGT this time, and now we're seeing the government, setting up a committee to, consult widely. Do you think, this promise of a wider consultation and a human face in implementation will be enough to maintain Nigeria's competitiveness, attracting, foreign portfolio investments at this point?
Ladi, like I said, the last time we were there together, I complained about the capital gain tax and in terms of implementation, what the government is really trying to do, and whether stakeholders were carried along. And finally, you're beginning to realize that, the stakeholders were not carried along. Sometimes we do things, then you just come with a policy that has been signed into the law. Now you're not consulting people to know what is the area that we need to deal with. I think government had not brought clarity in the area of this tax reform, and which is investors globally always look at your tax policy before investing in your market. And you know what happened when this clarity was not there, how the market suffered the largest loss in a single month in the history of the Nigerian stock market. And since then, the market has not recovered. We are seeing gradual recovery. And remember the kind of recovery we saw a day after when the minister said, "We've heard you, and you will hear from us soon." So we are beginning to hear from the minister. I like what the Tax Implementation Committee chairman is saying. I like the way they are trying to go about their activities. But again, Ladi, time. This bill is supposed to, implementation is supposed to start on the 1st of January. So I'm wondering how they will be able to pull it off, reduce it, coming with a new process. Will they suspend it for now? There's still no clarity. And like I always say, market needs clarity to go forward. If you watch what the chairman of the implementation committee was saying, he was saying that we'll consult and we'll see how implementation can still start in January, but maybe we'll talk down on some of it. Maybe we'll step down some of them. There's still no clarity on what we have to do. I like what the Nigerian Exchange Group is doing, now beginning to come out to ask for a suspension for the next 5 years. And other capital market operators are saying, let's have a breather, let's prepare for this. How do we go about it? Ladi, in the Nigerian market need a lot of foreign investors, especially to stabilize the naira. And we cannot drive foreign investors. You have to bring attractive investment product for them. For me, if you ask me where I am, I think the capital gain tax should be thought through carefully. Implementation should be suspended for now. Take through the stakeholder. The economy is still fragile, even if we are excited about what has happened thus far. But there's still other issues, and one of the major issues is to create stability in the FX market, so that we don't suffer what we suffered when it went to as low as 1,300, and you saw it now went back to about 1,700 before it's returning to where it is now.
So, Mr. Muktar, definitely, I believe this, CGT tax, it definitely has, a good side, to it. I guess it encourages, long-term investment, because if you sell out of a stock and, you get to that threshold, if you invest in another stock, I guess you will not be taxed. So is that encouragement of, long-term holding, and many other good sides to it, because definitely increases government revenue. I guess it also helps to enhance market transparency in a way. Does the good not outweigh the bad?
Ladi, yes, I agree. You reinvest your capital. You don't pay capital gain tax. You also, if you're a retail investor, if you don't go outside 150 million, you don't pay capital gain tax. Yes, you have liquidity. Yes, those are good policies. You can see it from there. Now, Larry, this is what happened. If I'm going to hold this stock for the next 1 year, I'm not selling. I refuse to sell any of my stock in 2026, where the capital gain tax comes into implementation. In 2027, will you be taxing me when I decide to sell? Will you be taxing me that I made so much profit in 2026 that I didn't sell? Will you start taxing me from the profit I made in 2026? Or you have to wait for me to make on that profit from January 2027 before you say tax? Those are the type of clarity the market needs. Every market in the world, there's a level whereby if you have hold a particular equity in the market, you have deepened the market, you have gone through the downs and the up of the market, you have a type of leverage, a type of, will I say, a type of holiday because you have stayed in the market for a long time. Incentives. We should create incentive. If I hold a particular stock for 5 years, at the time I'm selling, will I be paying capital gain tax? And how will this capital gain tax be calculated? Those are the type of policy we need. To deepen the market, you must create incentives. The incentives now is not enough because I'm holding a stock for the next 3 years, for the next 4 years. And at the time I'm going to sell, you are still, how are you going to calculate that tax? Do you tell me if I hold that stock for the next 2 years, 3 years, I do trading and I do not take the money out of the market, do I enjoy a tax holiday? Do I enjoy a tax freedom? Because I've held that stock for a long time. Those are part of the kind of policy you bring in that attract investors into your economy, into your market. Because every investor, any place in the world, are looking for tax holiday. You need to, because no business survive when you have the return, the payment of tax is higher. So you need to look for incentives. And Larry, like I say, the era whereby tax is just an avenue for revenue is gone. These days, tax has become a means of growing your economy, creating more jobs. And those people that have jobs are not exempted from the taxes. So I think that's what the government should be looking at.
All right, so it's no longer about, raising revenue, as you've said, at this point. But I'd like you to help me paint a picture here. What would you say is the, average mindset, of a foreign investor, that's coming to Nigeria's equities market? Do you think they're more, long-term focused or more short-term?
They are more short-term, Ladi, because of the volatility that you see in the Nigerian market. In any emerging market, there's volatility. Once there's any external shock, it tends to affect the market. Oil price go down, it affects the market. Gold price go down, it affects the market. War in Ukraine, it will affect the market. So when you look at investing in emerging economy, the currency issue is a major issue that investors are dealing with. Then creating the two-way exchange system. Once this crisis comes in, the two-way exchange system becomes a problem. So what investors are looking for are safe havens that will create the two-way exchange system. And they are mostly short-term players because of what I've just mentioned to you. If we begin to have policies, if we begin to drive policies that are sustainable, and they are for the long time, then you will see that most of these foreign investors will want to stay in your market for a long time. Lardy, what normally happens is the foreign investor comes into your market as a short-term investor, looking at your microeconomy, looking at how your economy is going, look at all variables of your economies. They are the ones that in turn become foreign direct investors who are here to stay for the long term. The foreign investors, those ones are here to stay for the short term, those that play the market. But the foreign direct investors, which are the key drivers of stability in your market, first of all come in as a portfolio investor before they begin to look at themselves as a long-term investor. So you must create that microeconomy. You must come up with policy that they think that is sustainable and it will help in them driving profit. Every investor is thinking of profit. That's why they are coming to your market. Ordinarily, they will be in their own market.
Right. So I guess you can convert, hot money into cold money. When those investors come with FPI, somehow they like it and they say, you know what, let's make it, FDI. But, given the potential tripling of, CGT for foreign investors, how should fund managers, individual investors, adjust your strategies, to mitigate the risk while staying engaged, in the Nigerian equities market?
Ladi, that would be tough. If you look at the numbers today of foreign investors in the market, they are sitting in the first. That's why you remember when I heard the Presidential Committee chairman saying that foreign investors are excited about the capital gain tax of 30%. I was wondering, where did you get that from? They will definitely be sitting on the fence, and fund managers also sitting on the fence. You can see that effect on the market. The market has not really recovered. We are just seeing gradual recovery, and hopefully with those statements that were made by the Presidential Committee, we might see a little bit of recovery, because the market is suffering from clarity. So it's not the best of time for a fund manager and the foreign investors. Their strategy, as it stays now, is the strategy of what the late Bola Ige used to say during the military regime: sit down, look. So I think that's what is happening in the market now. Everybody is doing sit down, look, especially institutional investors, foreign portfolio investors. But again, for the pension fund administrator, for the institutional investors, are there local institutional investors we are talking to that will not be paying capital gain tax? And then pension fund administrator won't be paying capital gain tax, but you ask how many of them are really in the equity market. Retail investors, like we've said, will not be paying capital gain tax if you do returns up to 150 million. But how many retail investors actually will do investment into 150 million? You know how the retail investor mindset is. He invests for the very, very short term, and even when he's trying to do the long term, when issue comes out that must be dealt with, they tend to go back to the market to make withdrawals. So those that can deepen the market are the foreign portfolio investors. Those that can help sustain the kind of growth that we see in the market are the foreign portfolio investors and the local institutional investors. Now, Ladi, as it stands today, the Nigerian equity market, which used to contribute less than 20% to the GDP, is contributing about 50% to the GDP. So the government need to pay attention to it. And going forward, between 2026 to 2030, they are meant to contribute about 75% to the GDP of the Nigerian economy. So it's not a sector that the government should just fold their hands and watch policies that will kill that sector. They need to come in. They need to stabilize that sector. They need to come in with human face type of policies, so that we can use the stock market to become the barometer of the Nigerian economy. Ladi, just imagine if the stock market has about 75% of the GDP of Nigeria at this moment. You imagine how foreign investors will be trooping into our market with the kind of return that we have seen. And that will have a snowball effect in every area of our economy, especially in stabilizing our currency.
All right, so I guess you've unlocked another strategy now. We have the sell in May and go away. Now we have the sit down look strategy, as you said there. But let's look at the NGX now. November wasn't a month to remember. It was down about 7 to 8%. But we're starting off December quite strong. That's 2.5% already, a month to date. At this point. So December is looking strong. What do you think is driving this sentiment? Is it just a recovery, from November? And it seems this also played out with global indexes, too. December is looking strong this week.
Ladi, I said it on your program. With INI, the time the market had the issue, I said 3 things were responsible for the kind of losses we saw in the month of November. November naturally is a bearish month in the equity market. If you are a student of the equity market, October, November is always a bearish month. If you go through the past 10 years, you look at the data, that is what happened. That was affected. Secondly, the capital gain tax, like we said, there was no clarity, and then investors were trying to pull out of the market. Then remember what I talked about, the President Trump's designating Nigeria as a country of particular concern, and that was not the issue, but the response of the Nigerian government was not diplomatic enough. Imagine if they have done what they are doing now, engaging the U.S. at that time, rather than being confrontational. I'm talking about our sovereignty and why we don't want the U.S. to intervene and that. But now I think they are doing the right thing. Now, Ladi, like I said then I told INI, And I said, by December, you see the market recover. Recovery as it stands now is not unusual in the month of December. Portfolio investors reshuffle their portfolio and also begin to look at the third quarter, knowing fully well that between January to March, the earning season starts. And you know what the earning season means to an average Nigerian investor or institutional investors. For average Nigerian investor, is cash, good dividend payout. For institutional investors, it's good dividend yield, buy and buy capital appreciation. So normally December is like this, but it's starting early. I think Santa has come to the market early. Normally Santa comes to the market the middle of December. So Santa is in the market early. And like I said, hopefully with those clarity that are coming in the capital gain tax, it's obvious from the body language of the government that we might be seeing them coming down on that tax, either suspending it for now, engaging the stakeholder, or reducing the numbers in terms of capital gain tax. So you see the market will continue to respond positively. But normally, Santa normally comes to the market in December, and that's what we are seeing.
Year to date, we're up about 42%. So month to date is 2.5%. Also, week to date at this point. So yeah, I guess that Santa rally might actually be coming. Definitely, I'll be looking out for that. So we see if that dirty December gets, more dirty. But let's look at gold now. That's a safe haven at this point. And Mr. Muktar, I wonder if gold has gotten your attention, at all. This year, we're seeing it's up about 60% year to date. That's talking about gold. Started the year about 2,600 per ounce. Current level 4,200. And definitely, we know investors love to run to gold when they feel like something bad, is about to happen. So, what's bad that's coming at this point? Seeing where gold is.
Larry, I'm sitting here trying to look what bad is coming for gold. I can't see any bad coming for gold. Now, rather than if we have crisis in some of these producing areas, especially in Africa, if we are, because it seems to be a new twist in Africa now, we begin to hear cool. Maybe that might only be where we will see those challenges. But where I'm sitting now, I don't think so. Don't forget that the Russia-Ukraine crisis, there seems to be light at the end of the tunnel. 2026 is predicted to be a very stable year for microeconomy, and also once you stability in the microeconomy, the gold market is always a gold mine, like it is called. So I think and like you say, it's a safe havens, and a lot of investors are moving towards that commodity in keeping up with that. So for me, I think as I'm sitting here, I don't see any major challenge that will affect the gold market. Rather than I will see an uptick in the gold market, especially when investors are beginning to look for safe havens. Because if you look at the global economy, especially in terms of the stock market, you realize that there are talk of a bust in the AI space. And so you might see investors looking for safe havens to make sure that they preserve their gains, and also improve their gains, and they will be looking towards the gold market as a safe haven.
Right, and I've had a couple of investors, they've asked me, where do you see the top, for gold at this point? And we've heard from most of those global investors. They say maybe about $5,000 still has room to maybe $8,000. In your mind, do you still see more legs for gold, going into 2026?
Definitely, Ladi. I think I'll see it. Definitely, I think so, because again, like I'm saying, 2026 is not going to be so much of a volatility, and a lot of profit that have been made in 2026 will be looking for safe havens, and gold is always the first safe haven for every investor.
All right, we'll keep tracking that. Thank you so much, Mr. Muktar Mohammed is the CEO of Finance with Muktar. Thank you for starting off this week for us. Thank you.
My pleasure, Ladi. Thank you for having me.